Awesome. So thanks everyone, welcome. Excited for this webinar. Thanks to the teams at Extensible, Station A, and Energetic Insurance for letting me host. This is an exciting experience for me, partly because I come from a background of hardware. So I'm technical director at Powerhouse, and my sort of in a previous life, I was in deep R&D material science for manufacturing of photovoltaics. And one of the reasons that I ultimately decided to sort of find a new career direction was just that I was finding that the R&D, the hardware costs of the photovoltaics was really not limiting our deployment of solar. And so I was really excited to kind of look and learn about all of the other components that are really gating us from deploying more solar, on all of the scales. So nowhere is this more clear, I think, than in commercial solar. So I'll take a minute here and give everyone a chance to introduce themselves. Kevin, do you want to go first?
Yeah, sure. Thanks, Tavi. So I'm Kevin Berkmeyer, CEO, co-founder, Station A. Just quick background. Spent my whole career in the space, working in retail electricity, trading power, developing solar projects with First Solar, working in stationary storage with Tesla and ARPA-E. Yeah, thanks to Tavi at Powerhouse, John at Extensible, and Jeff at Energetic for including Station A in this.
Great. And let's do Jeff next. We'll do this in order.
Great, thanks. So Jeff McCauley, co-founder and president at Energetic Insurance, and very similar background, Tavi, as you mentioned. I started off as an engineer doing technology and product development in renewable energy, and found my way moving to the project finance and ultimately insurance to solve the problem as I experienced it personally, which was around deployment more so than new technology, which is fantastic. It's a great place to be. It means that we actually have a lot of the tools, some of which we're going to talk about today, to really focus on deployment. I've worked at Fraunhofer, at Enernoc, and at some other technology startups, and even going back to fuel cells. So really excited to be here today, and thankful to Powerhouse for all the support as well.
And awesome. Thanks. And John.
Yeah, and that leaves me. I'm John Powers, co-founder and CEO of Extensible Energy in Berkeley, California. And I've been an energy nerd for my whole career. Spent 30 years in the business, probably half that time as a consultant and half as a startup entrepreneur. This is, not my first rodeo. I've had other startups in the energy software space, but I'm super excited to be more fully focused on the solar space, and in particular, commercial solar, because I see huge potential there. And I'm really happy to join these three gentlemen, because I think together we all have a role to play in blasting this market wide open. And thanks especially to Powerhouse for hosting. Take it away, Tavi.
Great, awesome. So I prepared just a couple of slides just to give a little bit of context and where Powerhouse sees a lot of opportunity in this space. So obviously, I think everyone is aware of this, but commercial PV is a fraction of just global PV deployment lags behind, right? So residential has a long history, utility scale solar is obviously booming, but commercial has always sort of been this untapped or underutilized opportunity. And I think, one of the main reasons that's really driving that is this huge fraction of our costs that comes from soft costs, right? So Powerhouse recently did a deep dive into the different cost mechanisms driving solar. And one of the things that I'm really struck by is that the majority of costs today for commercial PV have nothing to do with the hardware, right? Their labor, their permitting, their deployment, all of these things that are really just slowing down the deployment of more commercial PV don't have anything to do with the hardware technology, as sort of Jeff and I described. And so there's three main factors that we wanted to talk about today holding us back from deploying more commercial PV. So the first one that Kevin's going to talk about is finding quality projects. obviously it's really hard to find good projects that satisfy all the criteria. And then Jeff's going to talk about creditworthiness, supporting banks and financing these projects, making sure that these projects are creditworthy. And it can make it hard for even a profitable business. They can get turned down for commercial solar loans. And then finally, of course, there's the question of ROI. So there's not all of these projects are going to achieve the return on investment that some folks may want. And so Extensible Energy can help with that. So that's sort of a short summary of where Powerhouse sees some opportunities. We're really excited about all of these soft costs, balance of systems, sort of the things that have been overlooked by the huge trends and improvements that have happened in the past few years. So just a couple more comments that I wanted to make before I hand it off to Kevin. So obviously this is a resource in the context of a broader environment. So coronavirus is affecting everything right now. And so we sort of view this as an opportunity for you guys to get a little bit of training, get ready to do more deals, build your pipeline. Obviously permitting and deployment is really slow, but you can still build out your pipeline so that hopefully when things mellow out a little bit, we can be ready for deploying new projects. Finally, we'll be open for questions throughout the whole time. So there's a chat where you can submit questions, and then we'll moderate the questions and then hand those off to each of the sort of responsible parties. But with that, Kevin, why don't you take it away?
Great. Thanks, Tavi. Appreciate the intro and context. Yeah. Let me just pull up my screen here quickly. Great. Can you all see? Yep. Seen shaking heads. Cool. So Station is a software company. So we help our users determine which clean energy option is best for any building. So our users include sellers of different solutions, channels to the customer, and then buyers as well. So big real estate portfolios. In many respects, we built, what I wish I always had in my various roles, a solution that can really help find quality clean energy projects more efficiently or as fast as possible. So today I'll cover two things primarily. So one is how to leverage our platform to find quality solar projects. And then two is how to embed our data and insight into your own app or website as well, or at least to embed and integrate within your workflow a little bit more easily. You can do everything I'm about to show you, and I'll just kind of walk you through this process. But start by going to stationa.com. You click join now. And then if you don't already have an account, you want to create a new account. I already have an account. I'll sign into that quickly here. And where you'll arrive is dashboard. So this dashboard includes like product updates, tutorials, subscription status, things like that. And we offer a free 7-day trial, for anybody to kind of play around, and then the option to upgrade to a monthly or annual subscription. So wanted to start by keying off of what Tavi said in terms of finding good projects. So showing you guys how to find good projects in a bottoms-up way. So through a map. So I'm going to click on this Explore app here, and effectively do this bottoms-up analysis and explore a map to find good projects. Let's say I'm a developer. I want to explore Southern California specifically, where I know that solar can save a customer money and demand charges would enable me to take advantage of, let's say, Extensible Energy is offering to improve that value prop to the customer. So I zoom into Southern California. So just to say one quick thing about it, this is a map, obviously the United States, all these yellow dots represent substations. As we zoom further in, you'll just start to see more and more information. And so the way that you could kind of consider what we've built is, this clean energy map, the built environment, where we've gathered and collected all this different data that's relevant to an energy decision, synthesize that, and then serve that up for about 1 million different places across the United States, continue to add to that on a regular basis. So in this case, I'm just zooming in to Southern Cal Edison's territory and Long Beach more specifically. As you zoom in, you just continue to see more and more info. So now you can see these substations a little bit more prominently. You can also see the interconnecting lines, so the transmission lines. You zoom further in, you start to see building footprints. So these blue outline buildings. Even further in, you'll start to see even additional data like land parcels. So these yellow outlined shapes. Circuits are these red lines connecting those substations to load. And then these gray buildings as well. So those are buildings that are typically less than 10,000 square feet that we have kind of purposely excluded for the intent of focusing on C&I. Now, there's a few different ways that we can explore this information, or at least more visually explore it. We can change the satellite base layer, we can change the base layer to show the satellite image of these locations. We can also color code buildings by solar potential, for example. Just going to go back to the vector base layer. What you can start to do is just explore different geographies, different areas, like I'm doing right now. Looking more visually, from a bottoms-up perspective for a project that could be a good candidate for solar, for example. And so as I explore this map, I can kind of dive into any of these specific buildings that I'm at least reviewing here, and then start to understand more detail about that specific location. So in this case, I just clicked on this random building here. You can see satellite image of that building, a quote around savings, and then questions that we ask. Does this location have a cluttered rooftop, for example? So it looks like no. But I can also just dive into, just to kind of show you, the expansiveness of this, any of these buildings. And again, see a satellite image of that location, these quick estimates around savings, and then additional details. So I can just dive in here. So in this case, for this specific building, we take into account the physical attributes of that building to size a system. So based on the roof area, as well as NEM limits from a solar perspective, also the size of battery system based on the physical constraints and peak load. So you can see here, 830 kW. We also account for subsidies, and then we do run a financial model to essentially determine what this potential savings would be. So this is like the highest level of savings that we think you could achieve from a tax efficient PPA for the specific project. Then we dive into more detail around the location. So square footage, number of stories, the owner of that location, county information, state, et cetera. Energy estimates. So we predict energy usage for every building, disaggregated by cooling, heating, lighting, and equipment. And here you can see that breakdown on a monthly basis, so about 540 kW in peak. And then grid level information, more specifically cost of electricity, broken down by demand, energy, and fixed costs, which tariff we think they're likely on. So in this case, TOU 8D, a link to that tariff. You can click this, a link to that tariff PDF pops up here, as well as other tariffs that we've assessed for that specific location. Available incentive programs, so in this case, eligible for SCHIP, and then closest circuit to that specific location, utility, ISO. So all of this information is represented for all million of those buildings across the United States, across any geography. We continue to add additional data and insight to our places on a regular cadence, including adding real live market quotes from capital providers as a start. So we're starting to enable users to get live market PPA, PACE loan quotes for any of our places by clicking on this request quote beta feature here. And we'll be continuing to expand this offering, expanding the different kind of market quotes that are available within our platform to our users. So as an alternative to this kind of bottoms up perspective, we can also take more of a top down approach to finding projects. So let's say you want to find project at scale across a whole geography or a whole company portfolio across the United States, or specific to a location, a utility territory or a city or a county. We can do that more top-down analysis, start finding good projects using this analyze mode. So there's two different ways of doing this. One is you build a list with a criteria. So you can see some examples here. Let's just say SC solar targets, greater than 500 kW. We save that list, and then we set that exact criteria. So in this case, United States, obviously, say California, let's say minimum peak load of 500 kW, and then we want to focus on Southern California Edison specifically. So I can adjust these criteria however I want. Click save, and then we instantly have a view in over 4,200 buildings that match that criteria. So buildings with a solar potential of greater than 500 kW in SC's territory. What's kind of neat to here is we can change these columns. So let's say I don't care about annual usage, but I want to see solar potential specifically, and I also want to see the owner of that location. Now you see those columns adjust. What's nice too is you also have these aggregates. So there's about 4.5 gigs of solar potential, technical solar potential across those 4,200 buildings with at least 500 kW minimum solar system size. We can sort these in a descending or ascending manner, as you can see here. And then you can click on any of these locations and again, pop up that exact same place card that I showed previously with all of that same detail. These are massive buildings owned by Target in this specific case. So those are kind of the two ways to explore this data more organically. There's another way that you can build lists, and that's to match a set of addresses to our places. So you can click this request file import. And this is really if you have a list of addresses, whether those are current customers or a list of addresses for a portfolio that you're trying to assess, you upload that Excel spreadsheet of those lists. We then match those to our places. So a good example of this is we recently took a list of addresses of 3,000 Walmarts across the country. We matched those to our places, helped the user discover which are best candidates for solar. And it was about 2,500 of those, 85% of those can save around $200 million per year with solar and or solar plus battery. So in addition to adding more data to our places, expanding coverage, we're starting to embed this data and insight into our users' workflows and websites to engage directly with the buyer as well. So we have released what we call the Station A SDK, enables you to embed this functionality into your own website or app. I'm just showing you the CRM version of that. So you can embed clean energy, like our clean energy data and functionality into your CRM to unify workflows, improve efficiency. So here, this is my actual CRM. SunPower is a customer of ours. Based on inputting an address here, we automatically reflect this place card here. So it's all of that exact same detail and information that I had shown you previously. We can also do similar things with displaying this in your website to inform visitors, generate interest. And we're starting to present different recommendations, clean energy recommendations in customer portals as well to increase engagement, deepen those relationships. So this really enables our users to very quickly find good projects in a way that is directly integrated with their workflow and their CRM more specifically. And so that's really what I wanted to show you. I think once you've qualified a location or a portfolio of locations, as I've shown you, you can now easily dive further into diligence, evaluate more specific options like Energetic Insurance's products, Extensible Energy's products for those locations. That'll enable you to further refine and improve your pitch, obviously. I think Jeff at Energetic will walk through their offering. I won't be able to do that justice. But we think it's products like Energetics and Extensibles that really can help unlock a lot of this potential that we've identified here. We have a lot of changes coming, so please just don't forget to follow Station A on LinkedIn, Twitter. That's where we share our latest product updates. And yeah, thanks for the time.
Awesome. Thanks, Kevin. That was really cool to see the progress that you guys have made. I know I'm getting some comments here about that progress. Jeff, you want to fire up your demo, and then we're going to do questions at the end. I'm seeing a bunch of good questions from everyone, so appreciate that. Just use the Q&A as you get excited. Go for it, Jeff.
Great, thanks. And Kevin, really impressive what you and the team have built there, and a great segue because a lot of what we handle is that, once you've got a site, you've got an off-taker identified, then maybe even you've got a PPA or draft PPA signed, the question really becomes about financing. And a lot of what we see is that developers aren't going after a lot of those sites that maybe look, like they have great savings, for fear that there won't be an efficient financing option. So we want to enable and empower our developer customers to go out and win more deals, have greater confidence of being able to close those and ultimately get them financed. And as I mentioned earlier, I mean, this is really something where both for me and my co-founder, we experienced this problem specifically of not being able to get deals done because of off-taker credit risk. And so built this product, we built the product that we wanted, very similar to, as Kevin mentioned, coming from within the energy industry and renewable energy. So this is really our approach to try to be able to improve and accelerate adoption and deployment. So just to be super, super clear, we are an insurance company. We sell an insurance product. That product pays out when off-takers don't. It is a credit insurance form. We've adapted that from a global trade credit insurance market to be specifically tailored for the renewable energy industry. It's pretty simple. A lot of times, even for deals that you think might be financeable, credit is a big topic these days. A lot of folks are finding for projects that they thought were going to be able to get financed, all of a sudden the world changes. Bank credit committees are tightening up their requirements. So it's not just about those new deals, it's also about current deals that are on the table. It's about operating projects that are getting refinanced. All across the board. We actually sell a product, most insurance products you buy because you have to. We actually want to have an insurance product that you buy because you want to, because it helps you do more business, it helps you transact. And so that we see as a benefit to our developer customers, not just doing more deals, but faster, lower transaction costs, not hunting around, not spending time negotiating back and forth with an off-taker, trying to get that parent guarantee or some other form of security that can slow down the deals. And ultimately, we're able to do that because we partnered with the 4th largest reinsurer in the world. That may not be a household name, but they're called SCOR. They're the French reinsurer, although you may have heard of the Swiss and the Germans. So this is just a massive balance sheet that is standing behind us. So we couldn't be more thrilled to have them as a partner. And that really, top credit rating from the insurance balance sheet is what allows us to get banks comfortable with the risk. And in turn, our role is we built the software tools and underwriting methodology behind the scenes so that SCOR has essentially given us the ability to go out and bind these policies on their behalf, obviously in close collaboration. And so, contrary to Kevin's business model, our software is all behind the scenes. The interface layer with our developer customers is through an online portal. So once you've got that PPA, the off-taker financials, a basic pro forma, you upload that through our website, a fully digital insurance application. We crunch that behind the scenes from a variety of data sets, run that through our actuarial models, and we can get indicative quotes back in 24 to 48 hours. Either kind of a binary yes, or in the case of yes, we can usually give you kind of plus or minus 10 or 15% idea on the premium. In terms of price, we price the risk. So depending on the quality of offtake, the quality of some other factors, you can get a different rate. If it works, do it. If it doesn't work, let's look for another one. Not everything gets through. But we do find that in general, we're able to help enable financing, either from a binary perspective or to improve terms with debt or tax equity. That could mean loan to value, that could mean amort, that could mean DSCR, that could mean interest rate, any number of levers that we can help move, but ultimately improve the overall financial picture. Behind the scenes, we're looking at 5 categories of factors. So not just the off-taker credit, but also the project finance structure. We're looking at who the project participants are, down to the type of modules being used, O&M providers. We're looking at regional factors, and then a lot of the same tariff and subsidy elements that were mentioned before as well. And that's all behind the scenes, but each one of these factors has a way of influencing the price. So ultimately, we've been really fortunate to have a ton of support across the board, state, federal, venture, international, and you know, it's been a long journey to get here, and we're really happy to be in the market and supporting other folks in the industry. We have a very collaborative business model. We don't really compete with a lot of folks, so definitely reach out if you have more questions. We're very accessible online, and there's a contact tab on our website for more information and to get access to that application. That's it for me.
Awesome. Thanks, Jeff. Yeah, cool. So nice for me actually to see some of the guts of how that works. Thanks for sharing that. And I guess this is a good segue. You know, let's say you've found your project, you've nailed down your financials. How do you make it profitable? And so I think that's where John Powers comes in, right?
Well, we like to think so. So let me see if I can also show, not just tell. Everybody see that? So as Tavi was saying, we now know how to find great deals, and we now know how to finance them, but we still want to make sure that the solar benefit is going to the customer, that you're getting the best return on investment, shortest payback time you can. So I'm going to back up and show a little bit about what's going on with utility rates, because that's, of course, where the savings come from in all of these behind the meter commercial deals. And utility rates are becoming less advantageous to solar, not more. Kevin pulled up a site in Southern California Edison service territory on the, I believe it was the TOU8D rate, which means it's on a rate that has fairly economical energy charges, but extremely high demand charges. And in fact, if I saw correctly from the screen on Station A, 46% of that customer electricity bill is on the demand charge. So solar's great at saving energy, but not demand. So we'll get to that in a minute. The idea is that what we want is to be able to, well, this is happening all over the US actually. It's not just in California. What we want is to be able to save on the whole electricity bill. So here's an entire usage pattern for a whole month of a customer, not obviously the one that that Kevin was just showing, but this is a regular everyday office building in California. And if you take a look at what happens, it's got solar on it. Obviously, it's selling back to the grid every weekend, right? This is exactly how the building was designed to work. Shuts everything off on the weekends because, after all, it wants to save energy. This is a building with an energy management system that is doing exactly as it was programmed to do. But after the long weekend of Memorial Day, when it was hot, it was 85 degrees inside the building when it was cleverly saving energy. Well, it checks its watch at 6:01 and the building says, wait, it's supposed to be 72 degrees in here. And it turns on all the pumps and compressors and fans and everything else. And it sets a new peak demand that the building owner has to pay. What happens next? Nothing, because the building owner always pays his utility bill. He's just mad, right? He's just mad at the utility, which is just like every other day of his life. He's also not very happy with whoever sold him the solar, because the solar was supposed to save him on his utility bill, and it's not. So what we're doing is trying to make sure you can save on your entire utility bill, not just the portion that solar is good at. So we're looking for folks who really want to be more providers of total energy solution than as I used to say anyway, panel salesman. So you have to be able to address the realities of the tariffs that are actually out there. And that requires you to have to go into the building, talk to the customer, see what their entire energy picture is, and then help them understand how to configure a better solution than your competitors can. And our solution that we contribute to this, it's a small part of any one of these solar deals, is called Demand X. It's a way to teach buildings how to learn from the past, predict the future, control their usage patterns better in the present. It's software that acts like a battery without requiring a battery. So it's easy to say, hard to do. We do some machine learning of all the past history of the building. We build a hyperlocal forecast of what the solar is going to do at that site, as well as what the whole building load is going to be. And then we send control signals into the building to modify the usage patterns of the large flexible loads. That could be batteries, that could be car charging behind the meter, but in most cases, it's heating and cooling, and in California, mostly cooling, because most buildings, the largest single load, especially in the commercial sector, is HVAC systems. And no one cares when the compressors run, they only care that it's comfortable inside. So shifting energy usage around with HVAC systems is a big saver on demand charges. If that sounds like a battery, it's like a battery. It's a virtual battery made of software with no permitting required, no master electricians, no fire suppression, none of the things that are making batteries so hard to deliver in behind the meter commercial applications. So if I take a look at what solar versus solar and Demand X solution would look like on that building that Kevin pulled up earlier, that building probably has a total electricity bill in the neighborhood of $250,000 a year. And with solar alone, you can knock out most of the energy charge. If you build a nice big 800 kW system on it, you can knock out most of the energy charge. But you still have 46% of the bill to contend with on the demand charge. So Demand X will knock 30% of that off, and you'll go from a 7 or 6.5 year payback to a 4.5 year payback. Which deal do you think closes faster? So that's it for me. I want to make sure we have plenty of time for questions. I've seen some great ones come in, but the idea is the same as what Jeff was just saying. We play nicely with others. We are a very collaborative group. So if you have deals that you want us to take a look at, just come to extensibleenergy.com and click on that get in touch, and we will take a look at it. And as I should have had a slide as Kevin did, please follow us on Twitter and LinkedIn. We're easy to find. So I'm going to let that go and turn it back to Tavi to go through some questions.
Awesome. Great. Thanks, John. Yeah, I feel like there's something about being the underdog that gets us all to work together. This commercial PV space can be a tough one, but you know, we all want the same thing. So I'm gonna take a couple of questions that came in about Station A that I think are all kind of asking the same thing. Kevin, there are a few questions here about just like, where do you get your data from? I guess both the tariff info, but also how are you predicting energy usage?
Yeah, sure. I'm just going to share my screen again quickly so I can just walk through it quick, if that sounds
Sure.
good. But so one other thing I didn't show you is you can also search this map just by keyword search. So I can just go back to that area in Long Beach, and let's say in this case I just want to look up a Lowe's like home improvement center. So this is Lowe's building apparently. And so what we're doing is pulling in all publicly available data that is, or mostly all publicly available data that's not that accessible standalone, also not that valuable standalone. And then we layer and link that data and then synthesize it in a number of ways to generate these outputs. But from the quotes perspective, we size systems based on the size of the available space, whether that's the roof or the parcels. So we collect data around the geometry of buildings as well as the geometry of land parcels. The land parcel data comes from parcel and county assessor records. In fact, we have about 140 million land parcels indexed. We have about 24 million buildings identified and about 1 million places with fully enriched information like this. The battery system size is sized, based on available space as well as load, so peak load. The locational data, so this building geometry data, like I said before, is publicly available data. That owner specifically, and the APN number is coming from that parcel data I mentioned before. Energy usage is predicted. So I saw another question in there around accuracy of those predictions. So we predict based on what we know about that building. So we've built a number of building energy thermal models that are tied to specific industry types. So we identify what we think the industry type is of a specific location, map it to one of those models, and then calibrate it based on weather and climate data for that specific location. And so that's what's represented here. That's disaggregated by cooling, lighting, and equipment. On the grid level, based on what we know about the location of the building, its load, utility territory that it's likely in. We actually use tariff data from Genability. So this is one of the data sources that we outsource to then map to specific tariff and then the likelihood as well. And so that's where that tariff data is coming from. Incentives, we add available programs, we add those shapes and files regularly. SGIP is a really big thing right now because of the new allocation of subsidy for resiliency and equity. So we added those shapes. Circuit data comes from utility, so from SC in this case. And so constantly kind of linking or I should say constantly layering in new data, making enhancements around the information, as well as improving the accuracy of that. From an accuracy perspective, I can just speak to that really quickly, Tavi, if that's all right. I saw that.
Yeah, no, that was going to be my next question.
Okay, cool. So we have access to a lot of actual load data from our various different users. We use that really primarily from a benchmarking perspective right now. So we use that to assess the accuracy of our models. We will start to use that to learn from it to improve our models. But on average, or at the median, we're about plus or minus 20%, off of actuals for buildings that have weather sensitive loads. So those would be buildings like schools, retail, offices, big box stores, warehouses, et cetera. And then for buildings that have industrial loads that are extremely hard to predict, not as accurate. So plus or minus 40% on those buildings. Did I cover everything? I think.
Yeah. The only other question I'm seeing is about about maybe locations. So you guys have the U.S. mapped, other countries?
Yeah. So we have all 50 states in the U.S. mapped, plus Puerto Rico, and then have started to expand into international markets, mostly Ontario right now, because of the strong energy storage market there. We have ambitions we will expand, into markets outside the U.S. I think we're at least just focused on getting the U.S. right for the moment.
Awesome. Okay. Yeah, appreciate that. Okay, so I know there are a bunch of questions here. I'm going to maybe get on to some questions for Jeff. There's a question here about, would it be possible for the off-taker to secure an insurance product prior to bidding out to solar developers? Yeah. Jeff, do you want to answer that one?
Yeah, it's a great question. We do see off-takers being the driver in many cases for the insurance product. We won't sell directly to the off-taker, but what we've seen increasingly in the case of virtual PPAs, there's an off-taker who has a letter of credit requirement. And as credit tightens, that's a really frustrating and expensive thing to maintain. And so they're looking for ways to replace that letter of credit with an insurance product, move it off balance sheet. And so what we're doing in those cases is just the off-taker can tell the developer, hey, I know you've said that I need to post this letter of credit or parent guarantee or this or that. Just go check these guys out. And the reason for that is a lot of the inputs to our underwriting are solar and energy specific. They're things that the off-taker just may not know necessarily. And so ultimately our insured is the project. We're not, our insured is not the off-taker directly, but it's a great question, and we do see that as a driver. And then I think there was just another one in terms of residential and then accessibility. So a lot of what we're doing is, you know, we've done commercial real estate. We're also doing projects that are multi-unit residential, and in some cases low-income housing. So we do see that as a key area that has been overlooked. We want to make sure that credit is not a barrier. The dream is distributed energy for everybody, not just the Targets and the Walmarts. So that's an important part of the mission.
Yeah, absolutely, and I would echo that. Some of our solar partners bring us multifamily to work on, and in the common area space, being able to lower the costs of operation there makes solar more accessible to multifamily housing as well.
Awesome. Yeah, thanks Audrey, Julian, for those good questions. Maybe Jeff, one more question about, have you paid any claims out yet? And costs, maybe you can speak to that.
Absolutely, those are really important questions. So, so no is the short answer. We haven't paid one yet, but that is the number one question that we get. Obviously, selling an insurance product, and so I guess two parts of the answer. Like, we're building this from a solar perspective, not an insurance perspective. So we're trying to design this product for ourselves, for our community, which is it has to work, it has to pay. The line is, when you want insurers to send money, they send lawyers. We don't want to do it that way. We're working with a very reputable insurer in a category of insurance that has a strong history of paying claims back through the financial crisis, and so that's really important to us as well. And then on cost, all I'd say is that it really varies highly depending on the risk, so hard to throw out a ballpark number. I will say that we're working on operating portfolios. So when you move from a single site to 5, 10, 50, 100, the price goes down massively as you have portfolio effects and diversifications. And the last point there is just, the question is not how much we cost, it's can we get you a loan and can we improve your levered IRR? If we can do that, you should buy the product. And if we can't do that, you should not buy the product.
Awesome. Thanks, Jeff. And I want to make sure we get questions for John here too. Question about how it works with batteries. So obviously you described your product doesn't need a battery, but what happens if there is a battery?
Yeah, so we're seeing more and more batteries going in for resilience purposes all over the West, not just in California. We're working on a project in Colorado where we're controlling a battery that was purchased primarily for resilience. So as long as we leave half the capacity for riding through any sort of outage, we're controlling the battery for TOU arbitrage and for demand savings, in addition to the HVAC loads that I talked about earlier. So yeah, we can control anything behind the meter that is a major contributor to demand that is flexible. So we don't, of course, control things that are the customer's main line of business. We would never control a kitchen in a restaurant, for example. But where shifting from hour to hour doesn't have a major impact on the business, we will take a crack at it. So that's car chargers behind the meter in workplace charging kind of configurations. That's stationary batteries for sure, and HVAC systems, and in some cases, non-critical lighting loads.
Awesome. And then maybe another question here about pricing, and a related question is, how do you guarantee that people actually save money on demand charges? So how does your pricing work? And
yeah,
how do you guarantee it works?
So it's a shared savings model. Basically, if we save the customer $1, we keep 33 cents. So it kind of pays for itself instantaneously. So we're only taking part of the savings that we're delivering. And then with respect to the guarantee, yeah, we do have a guarantee that while we are trying to save 3 times what we charge, we guarantee it will never cost more than we charge. So yeah, and that's a cashback guarantee. We'll make good if the savings aren't as great as our fees. So yeah, so it's a pretty simple model, and it depends obviously on the size of the building what that turns out to be. But a lot of the solar developers we work with do a sort of a 5-year deal that all gets qualified for the investment tax credit and rolled in with the whole rest of what the developer is already used to selling.
Awesome. Okay, cool. Thanks for that, John. And maybe last question is, what kinds of buildings do you guys usually work with?
So we usually target the ones where HVAC is the largest single load. That might be office, retail, church, school, conditioned warehouse, municipal building, things like that. So those are the main ones, just because, again, we don't want to be messing with the primary end use that's like a kitchen or grocery refrigeration or something that's their main line of business. But anything with large flexible loads, mostly HVAC behind the meter, we'll take a crack at. We usually, in that world Kevin was talking about in terms of building size, we usually look from 20,000 to maybe 500,000 square feet. Anything much above that, there's no point in trying this on the Salesforce Tower, but nobody's putting solar on the Salesforce Tower either.
Yeah. Someday.
Well,
okay. I want to make sure we've got time for all these questions. Jeff, did you want to take this geographies question?
Sure. Simple answer there. Pretty much anywhere in the U.S. right now where solar works, we can't change. If there's savings for the customer, then solar is going to work, and we're happy to work there. We're looking at deals all over the map. Obviously the hot places, California and New York, Massachusetts, doing a lot in Hawaii, but seeing more diversified portfolios. The only place I'd say that we get asked a ton about that we can't do is Puerto Rico. So not there yet, but we are looking at some other territories, U.S. territories. So.
And we're the same way. We're 100% partner driven. Our partners bring the solar development that they're doing to us. So really, we tend to focus on places where demand charges are relatively high. Anything sort of $9 a kW and up, we usually can make the deal much more attractive to the end customer.
And outside of California, where do you see the opportunity there?
So it's surprising. We've gotten a lot of Midwestern folks, Minnesota, Iowa. We've had a lot of inquiries from Colorado. Actually, some of our first customers were in Colorado. New Mexico has relatively high demand charges. And then, as you said, New York and New England have pretty attractive charges as well. We've gotten inquiries from all over the Southeast, and we still haven't closed a deal down there, but there's some really active installers in Florida who have brought us a number of deals that they're hoping to close in the next 3 months.
Nice.
Yeah, that relates really well to this question of demand charges. Like what sort of, is there a threshold demand charge that you're seeing that really activates these projects?
Yeah, we usually say $8 or $9 a kW. Anything below that, you really have, unless there's a very high difference between on-peak and off-peak time of use energy charges, because really we can shift energy around to meet the utility tariff. But yeah, much below $8 or $9 a kW, you're into relatively flat pricing where shifting load doesn't make that much difference.
Got it.
But
Okay.
just,
All right. Yeah,
just
I
as
think
an
that's probably
example,
super
the
useful.
one we looked at in Southern California, that if you aggregate the peak demand charge, the coincident peak demand charge with the non-coincident demand charge, it's on TOU8, it's something over $35 a kilowatt. So Southern California is a very, very hot area for us right now.
Yikes.
Yikes.
Okay. Awesome. There's a couple of questions here for Kevin about using the API and kind of what you're doing with the data on the back end. Do you want to answer maybe the API question first?
Yeah, interesting question. So the question is, can we use the Station A API to deliver rough quotes to our customers on our website? So we don't offer an API product, but we offer like an SDK product. Basically, what that means is that we can embed like our rough quotes, like our what we call indicative quotes and estimates into any website.
Mm-hmm.
And so I showed you the example of Salesforce, embedding that in a CRM. But what's been really interesting is we're starting to actually embed that into what we call channels, but channels websites. So websites that engage directly with the customer. And so we haven't announced these formally yet, but we've done an initial iteration of this with one of the largest utilities in the country with 10,000 of their customers, whereby we've embedded our recommendations, our clean energy recommendations into their customer portal. We are also now doing something similar with one of the largest global energy services companies, again, where we're embedding our clean energy recommendations inside of their customer portal for consumption by their customers, so to increase the engagement with their customers. And then also kind of doing similar things with other entities, other what we call channels, really to help people identify opportunities and projects more efficiently, engage with those users more, bring more transparency to what would make sense, what recommendations for different options would be, and enable projects more efficiently at the end of the day. Tavi, I see that question too about like, how is our info monetized? I can just nip that one quickly if you want.
Yeah, please.
So we offer subscriptions. So we have a free tier. Anybody can kind of explore that map and get a limited view into some of the data and insight I showed you. And then paid subscriptions at the monthly and then annual level. And that starts at $199 a month or $19.99 for the year. So pretty affordable. And then we have enterprise style of relationships, where we have like deeper integrations and provide additional services essentially.
Awesome. Yeah, it's a lot of opportunities to get involved. We've got a couple of questions here about, are we going to be able to share the recording of the webinar? My understanding is we're recording it and we're going to share with everyone after. You guys get an email about that. So thanks Brian and Ben for asking about the recording. I'm a little bit nervous / excited to see myself on camera. But that's fine. We've only got one more question here about addressing tenant property situations. So a lot of commercial properties have tenants with 5 to 10 year leases. Kevin, how do you guys deal with that?
Yeah, I mean, it's hard to have a view into.
Not just Kevin, actually. This probably addresses everyone, sorry.
Oh, yeah.
But yeah.
I can give our side of it. It's hard to know how long a lease is, obviously. I think, the way that we support this is by providing a view into the owner, who the owner is, of the specific location. You can also search, by tenant name too. If you had a list of addresses, for locations, that are owned by a certain entity, we can ingest those very easily and output all of our, recommendations and data and insight for those specific addresses. And then we are also, constantly updating that information. So kind of constantly updating like who that, that owner would be or is, for that specific parcel and for that specific location.
Yeah, I would add that's a key risk that we look at for the insurance product. A lot of times you have a landlord, but who's maybe an off-taker, but it's a bankruptcy remote LLC, and they're not, it's a, a REIT structure, and you're not getting a parent guarantee. So the question is, where do you look for credit? You've got tenants with, lease terms that are less than the PPA, and that's exactly a use case we find. And, we've insured multi-unit commercial due to exactly that problem. So that is an industry-wide problem, and one that we're seeking to address.
Cool. Awesome. John?
And I'll just say we work with whoever's paying the utility bill. So in that world, we're super happy for folks like Jeff who are making it easier to to identify the the folks who are going to get paid in the event of a default. So really, the commercial space is complicated. There's lots of owner occupied. There's lots of tenant landlord. There's lots of REITs. Each one of them has a different pattern for purchasing solar and being able to allocate the costs and benefits. And my hat's off to project developers who take this all on, because each one of those has its own battles that we try and help with by making the payback time faster.
Yeah, I think that all of that really addresses Audrey's question too earlier about making these products more accessible to the entire community of people who need energy.
Yep.
Cool. Awesome. I think that's all of our open questions. And I know we're coming up on time. Anything else that you guys want to highlight before we close here? Last minute chance for questions.
I've been watching the participation. Selfie. I just want to thank everybody for showing up, because we've had really good engagement from the audience here. Really appreciate the smart questions, and we got almost as many participants as when we started, so that's always great to see. So thanks a lot for showing up, and watch for the recording on, I think, all 3 of our websites. All four, maybe Powerhouse have it too.
Yeah.
Yeah, I would echo that. Also, if anyone has any questions, for me, for Station A, feel free to email me at kevin@stationa.com. Happy to dive in deeper and follow up as well on some of the different ways that we can help you guys out.
Yeah. Jeff, satisfied? Closing remarks?
Yeah, no, really, really excited. And it's just very encouraging to be here and hearing all the different solutions that are out there. So thanks for including me. And yeah, really, really enjoyed it today.
Yeah, thanks again. Really appreciate it.
Yeah. Thanks, everyone.
Thanks, everybody.
Hang in there.
Bye-bye.
All right. Bye-bye. That went well.
Yeah, I'm going to